Welcome to everyone. This week video will cover the gold market for the week of March 4, 2024. If you like this video, don't forget to click on the like button, subscribe to make sure you don't miss any future videos. Before we start, make sure you read carefully the disclaimer. To analyze the gold market, I use the GLD ETF. On the long term we still have the $200 target. This target's still valid until the market crossed below his cycle line. The only way to invalid a target or a target zone is when the market crossed to the opposite way, the cycle line, without meeting his target. Let's see quickly on the 40-week cycle, since there is no much change since the last important low in October 2023. On the 40-week cycle we still have the 195.62 target. This cycle low is expected to occur around the mid-May. This week, the cycle is pointing downward, meaning the 40-week cycle peak should occur soon. Let's examine the 20-week cycle. On my last gold weekly update, I was expected the low forming soon. The gold ETF formed the 20 weeks low on February 14th. We had the first confirmation on the 20 days cycle, we will see later on. We will have the definitive confirmation when the gold ETF will cross above his 20-week cycle line. Last week the median price met the cycle line at 190.46, but didn't cross it yet. If last week crossing is confirmed, then the potential target will be 197.14 or $6.68 or 3.5%. In case of the crossing is not confirmed, here are the cycle lines for the next 3 weeks: March 11th at 187.36, March 18th at 187.35, March 25th at 189.28. For this week the cycle line will be at 188.84. On the gold future market will be around $2,102. Last time we had a signal with the cycle line was on downside when the gold ETF crossed below his cycle line at 187.47 for a potential downside target at 181.76 or $5.71 or 3%. The February 14th at 183.78 is certainly the 20-week cycle low. If this low is the 20-week cycle low, the length of this 20 weeks will be 19 weeks, just half a week short. Since in the Hurst cycle nominal model the average length is 19.5 weeks. So we can label with confidence the February 14th low as the 20 weeks low. The success rate for this cycle is 100%. Meaning when trading this cycle, all the trades was profitable. What's next? This week, the gold ETF should confirm the crossing above his cycle line, confirming the 20 weeks low. The 80 days cycle. The last 80 days cycle low formed on February 14th at 183.78. We had the first confirmation when the gold ETF crossed above his cycle line on February 21st for the first time at 187.67. And the second line have been crossing on February 23rd at 188.33. The crossing provide a target zone between 191.56 for the lower part and 192.88 for the top part. For a potential profit of $3.89 and $4 respectively, or between 2.07 and 2.42%. With an high at 193.40, the gold ETF meet and exceed his target on Friday. The success rate is 63%. Since the February 14th is the 20 weeks low, we are in the up phase of this cycle and this until at least March 20th. When the 80-day cycle peak is expected, the red dashed line. But there is a possibility the peak will occur later, on the right part of the cycle. The 40 days cycle. The last 40 days cycle low was on the February 14th, then we start a new 40 days cycle. The last trading signal was on February 13th. When the gold ETF crossed below his cycle line at 188.26 for a target at 183.34, or $4.92 or 2.61% of potential profits. The next day the market met his target and at the same time formed the cycle low. On February 23rd, the gold ETF crossed above his cycle line at 188.39. Providing the first part of the target zone, but to be a valid signal, the gold ETF have to cross the both lines. The first part of the target is 193, or $4.61 or 2.45% of potential profits. The second part was triggered on February 29, when the gold ETF crossed above his cycle line at 188.26, providing the lower part of the target zone at 192.74. On Friday, March 1st, the gold ETF meet and exceed his target. The success rate for the 40-day cycle is 100%. The gold ETF should continue his up move, forming a peak around March 8th, but since we are in bullish trend, there is a probability the peak will form after that date. Hurst called it the right time translation, which is usually bullish. We can expect the peak forming around March 12th and the low on March 19th. At the time, the gold ETF will form his first 40-day cycle since the February 14th. We can expect this low will form on his cycle lines. Those cycle lines will be around 188.30. The cycle trend pointing downward this week. The 20 days cycle. On my last gold update, I mentioned the average length of the last 20-day cycle is 15 days. So the next 20 days cycle low was expected to form on February 20th. The low formed on February 14th, 6 days early than expected. But since the February 14th low is also the higher degree cycle low, we can place with confidence the 20 days low on this date. This 20-day cycle is very short. This sometimes happens when we have the synchronization of multiple cycles of higher degrees. In this case, we was expected the 40, 80 days and 20 weeks to form. Since the last 20-day cycle low occurred on February 14th, we can expected the next one form around March 1st. The February 28th is the present 20-day cycle low, 2 days early, we can expect the next one on March 18th or 19. The yellow zone on the chart. On the chart I draw the 20 days uptrend line, the green line. This trend line will help to identify the 40-day cycle peak. When the gold ETF will cross below this trend line, this will confirm the 40-day cycle peak is forming. In the meantime, the gold ETF crossed above his cycle line on February 23rd at 187.43 for a potential target at 191.08. On Friday, March 1st, the gold ETF meet his target for a profit of $3.65 or 1.95%. What's next? The gold ETF should continue his up move until at least the March 8th, where the gold should form a peak. Since the gold ETF is bullish, there is a possibility the peak will form later than the March 8th. If the peak form before this date, this will be the first sign of some bearishness start coming into the gold market. Then start to moving down to form a low around March 18th. During this correction, technically the gold ETF should cross below his cycle line, providing a downside target. This target should be on the 40-day cycle line. The success rate is 100%. Here the cycle line support and their potential upside targets if the market cross below this week. On my last update I published the following roadmap, mentioning if the 80 days and the 20-week cycle low occur on February 20th. Since the low occurred on February 14th, I update the dates. The February 14th is the 20-week cycle. The February 28th, the gold ETF found support on his cycle line for the 20-day cycle. Then rally making a high higher than the previous one made during the previous rally. Then, around the third week of March, the gold ETF should cross below his cycle line, providing a downside target. Certainly very close to the 40-day cycle line and made a low around March 19th. Then the gold ETF should rally again, crossing above his cycle line, providing an upside target. Around the first week of April, the market will cross again below his cycle line, providing a downside target for the 80-day cycle, with a first low on April 11th. Then rally using his cycle line as resistance, and resume his decline to form the 80-day cycle low on April 22nd. This is the bullish scenario. The 10 days cycle. The trend for the 10 days cycle is down for this week. The last two of the 10-day cycle was on February 22 with a low 187.05 for the first one, and on February 28 with a low at 188.04 for the second one. The next low is expected on March 7. The last trading signal was during the last long weekend when the gold ETF crossed above his cycle line at 186.26, providing an upside target at 189.19. With a high at 189.18, on February 23 the gold ETF met perfectly his target. For a profit of $1.93 or 1.04% on only 4 days. The success rate for the 10-day cycle is 90%. Meaning if we trade every single signal, we have a profits 9 times out of 10. In conclusion, the February 14th was the 20-week cycle. So now the gold market is in a new bullish up move, and is certainly on his way to meet his monthly $200 target. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.